Hi, this is Jack from AlphaCharts365 with your state of the market for December 7th, 2019. Before we get started, this is not a recommendation to buy, sell, or hold any stock or security. This is for informational purposes only. Okay, so with the S&P 500 chart, we were talking about this fib level right here around 3155. It hit it. We had a retracement. And then it's bounced, and we created a hammer, and then went right back above the 23-day EMA. So very constructive, just a little pullback right there. Really, in a week, went almost nowhere. All the moving averages are rising. Uptrend is firmly intact, and this just looks like a very nice chart. The QQQ looks very, very similar to it. If you see it, same thing, hit the expected fib area, came back, and now is moving higher again. Looks almost identical to the S&P. Moving to the IWM. So we had on this one, this consolidation, which everyone is aware of, right over here for almost the entire year. Busted out, retested that area, quick retest, held it, held also the 23-day EMA, and now is back at 52-week highs. So again, a nice retest, bullish action on the retest, looking really, really good. Dow Jones Composite Average. Looking at this whole area right here, which acted as resistance, and then we busted out convincingly, came back, tested the 65-day EMA, and now back above the 23 again. Very similar action, and basically in the last week, barely went anywhere, right? I mean, maybe down just a little bit. And the DJA, which is the composite average, is the utilities, the transports, and the industrials combined together. Nice uptrend, still intact. I like to look at the iShares Global Trust 100. These are some very large cap names in this one, and it is closing at a 52-week high. It's really nice to see the biggest stocks around the world making 52-week highs. There's really nothing bearish at all about that situation. So as a test or a measure of risk, I like to look at the SPY versus TLT, and I like to look at the line chart because it's easier to see, and you can see this downtrend line broke out, retest, and now is moving higher again. All the moving averages are trending up now, and you see the crossover here between the 65 and the 150-day EMA. Again, very bullish price action. This is an uptrend. You can see low, higher low, higher low, higher low, high, higher high. We'll see this ends up in a higher high. Hopefully it does. And again, that's just by definition what an uptrend is. Put call ratio. So we're looking for extremes here. Right now, I don't see any extremes in my opinion. I think we have a ways to go. You know, if we get down here, below 0.6 or more, I think that's where extremes occur. But right now, everything looks fine. You know, no extremes. We're good to go. As far as stocks above the 50-day moving average, we are in a nice little uptrend, but not at an extreme in any way. So it's healthy bull market right over here. You know, if we got into this pink zone, maybe watch for a little bit of a pullback. But right now, everything looks pretty good with that. Stocks percentage over the 200-day moving average is in a confirmed uptrend right here. These moving averages, beautiful. Yeah, I mean, that's what you want to see. Healthy, you know, more stocks are above their 200-day moving average than below, and it's increasing. We're increasing that number. Very healthy action. Let's look at some sectors and see who is outperforming. So, XLF. financials. Looking at a weekly chart, you can see back in 2007, we hit this 31-ish area. Second time, hit it. And then the big 2008 decline happened. And we have been working hard to get back up to that area, which we did in 2018. Hit it. And a decline. But notice how each decline is shallower, right? Shallower, shallower, shallower. And so now we're hitting the area again. What I would like to see here is a small pullback, create some energy, and then boom, a bust out. And I think that would be the most bullish scenario I could think of. Another higher low right here, maybe testing that rising 23-week moving average, exponential moving average, maybe, hitting that 29-ish area, I don't know, somewhere around there, and then a bust out. But financials are looking really good testing this overhead supply. The more times a level is tested, the greater the chance for it to come out. So I think one more pullback would be ideal, and then a bust out. Industrials. Now, industrials worried me this week a little bit because when you look at the daily chart, it came back down below what I would consider support on volume and tested this 60-day exponential moving average. Now, luckily it bounced right back and now is back above it. Again, volume is meh, it's okay, but only price pays. So we're above it, and I think that's a good thing. But earlier in the week, that dip below, I was watching for a potential failed breakout here and a potential move lower. Something to keep an eye on if industrials fail here. But right now we're back above the area. Everything looks okay. Healthcare. Healthcare is another one that's leading the market. So we had the big breakout here, and it's moved all the way higher. Now, this little candle right here and how extended it is from its moving averages says maybe we're due for a little pullback. Maybe it needs to touch this 23-day EMA for it to move a little higher, come back into this range. I mean, I don't know, but it's moved a lot very quickly, and it is extended some. So uptrend is great, but if it pulls back a little bit, I think that would be just normal action, price action for any stock really or any index. It can't get too extended, and because then it gets excessive bullishness, and the market is a way of shaking that out. And so that's what we may see in healthcare. But again, a beautiful uptrend. Looking at staples. Now, staples, a lot of people consider defensive, but they're just another index, and there's nothing wrong with them making, I think it's all-time highs. Yep, all-time highs. Closing at all-time highs, staples. So again, they are one of the leaders in this market. We don't get to choose who the leaders are. The market does, and that's and they're choosing staples right now. So there's some nice looking names in there. Looking at communication sector, this is one of the newer sectors, and you saw the breakout, the retest, and now the breakout, and the close at all-time highs. Again, very, very bullish price action here. Facebook and Google are the two big boys in this sector, and Google's already making all-time highs. Lumber is a area I like to look at for almost like a leading indicator, because it tends to lead the market. And you see that it came down, tested this area, came down, tested, back down, tested up here, consolidated, and now is trying to move higher. A breakout here in lumber would be extremely, extremely bullish in my opinion. It tends to lead the market, whether because it lends into housing and other sectors of the market. We're building things, we're doing things with lumber. So if lumber is going up, prices are going up, it shows there's demand for wood. And if there's demand for wood, where people are employed, housing is a huge, huge part of our employment data. And let's be honest, if we have very, very low employment, the chance for a recession also is very, very low in my opinion. So lumber, keep an eye on that. A breakout here, again, confirms, I think, the bullish thesis. IYG. Now, I've been loving this IYG chart for a long time now. And I think that IYG, going back looking at it, again, 2007, just like the financials, right? Hit the area, came back, hit the area, came back, big 2008 decline, came back, retested, broke out. So IYG Financial Services, which are the big boys, right? These are your JP Morgans, Bank of America, Citi, Wells Fargo, American Express, Goldman Sachs. Those are the big boys. And this is leading the financials higher. So if they've already broken out, there's a good chance financials as the entire sector will probably follow suit. But these are the leaders. So if you're looking to be in one of the leaders that are leading the market higher, I think financials is, IYG, which is the financial services sector, and some of those components are the way to go. Again, great place also to manage risk because you're not too far extended from the breakouts. Looking at semiconductors. So this was originally the big area, which is the 2000 highs. And we obviously broke out, retest, and now we're moving higher at a pretty steep trajectory. Little consolidation here just recently. It kind of makes sense. Let some of these moving averages start to catch up a little bit. And even if we move down just a little bit, but semiconductors still in a very major uptrend. Nothing bearish at all about that. Semiconductors are in everything we do within our life. So from our houses to our cars to smartphones, computers, everything we do. So if they're leading the market higher, I think that bodes well for the economy. I think that bodes well for the stock market as a whole. One of the new subsectors that I've been watching recently is XME, metals and mining. You can see that there was a downtrend, and now recently we've broken that downtrend line and we're moving higher. This is also a weekly chart. I haven't switched yet. So it's moving higher. SLX, which is the steel subsector. I love the way that slopes. I have no exposure right now in any steel names, but there's a lot of names that look really good in this subsector. So watch out for SLX and a lot of the steel names. I'm going to leave you with this chart. This is the equal weight S&P 500. I'm going to go daily on this. Okay, so to show how broad-based the market is and this rally is, take a look at the equal weight S&P 500. All right, so we had this band of resistance. Every stock is the same weight, and we had the breakout, we had the retest, and now the move higher. All right, so breadth is very good. Many stocks are trading higher. The trend is higher. Really nothing bearish that I can see going on right now. So, at this point, all we can do is enjoy the ride and try to stay in our positions because that's how we make money usually, right? But the longer we stay in a position, usually the better the chance we have of making a profit. I hope you have a good week trading and have a good week.